Welcome to Purdue Commercial AgCast. I am Joana Colussi, Research Assistant Professor in Agricultural Economics, and I'm here with Michael Langemeier, Professor and Director of Purdue Center for Commercial Agriculture. Today, we are talking about the results of the May 2026 Purdue University CME Group Ag Economy Barometer. Each month, we interview 400 farmers across the United States to understand their sentiment about the ag economy. This month's survey was conducted from May 11 to May 15. Stay with us, and before you get started, please like this video, subscribe to the channel, and turn on notifications so you don't miss future updates. So let's look at the main results of the Ag Economy Barometer. Farmer sentiment declined again from 121 points in April to 119 points in May. The current conditions index fell by 8 points, while the future expectation index increased by 1 point. This month's current conditions index was 19 points below its December level, reaching its lowest reading since December 2024. Michael, how should you read these results?
As always, there's some positive aspects that are impacting the barometer, and also some negative things that are impacting the barometer. Let's start with the positive things. The barometer would be lower if we wouldn't have seen some recent strength in corn and soybean prices. If we look at mid-April compared to mid-May, when the surveys were actually conducted, corn prices increased about 20 cents and soybeans about 50 cents. And so certainly that's making a difference. Also, corn and soybean prices have increased quite a bit since the first of the year. Corn prices have increased 30 cents per bushel, and soybeans a whopping $1.60 per bushel. And so we got to remember that the index could be lower because there is some negative things happening right now. Obviously, with the Iran conflict, we've seen a surge in nitrogen prices and diesel prices, and there's also an uptick in inflation, which is also concerning for input cost. And sure enough, when we asked people what their biggest concern was, over 50% said their biggest concern was input costs. That had been running about 40 to 45% during the last year, but it's never broke 50% before. And so that's certainly not a good thing. We also asked a follow-up question, or a similar question. What was the one thing that was limiting their financial performance this year? We had a bucket there of several things, weather, prices, input costs were in there, but about 45% said it was input costs. And so obviously input costs are a very large concern right now. We'll talk about a little bit later, but also the question we've been asking with regard to whether the U.S. is in the right direction or the wrong track, we saw a decline in the percentage that said right direction from 57% to 52%. That 52% is quite a bit lower than what it was running the last 6 months of 25, where it averaged about 70%. And so I was a little surprised that the index of future expectations didn't drop. It increased 1 point, so it's essentially flat.
Yeah. And like you said, there are many factors, and one that was very high was high inputs,
Yes.
with 46% of respondents. We had one specific question about that. The survey also suggests that many farm operations remain under financial pressure. Only 14% of respondents said their farm operation was better off in May than it was a year ago. And looking ahead, producers were a bit more optimistic, but still cautious. 22% said they expect their farm to be better off financially a year from now. We also saw the caution showed up in the Farm Capital Investment Index, which fell 3 points to 41. That was its lowest reading since September 2024, before the election. Michael, are farmers still pulling back on major investments, right? Like machinery, buildings?
I think that right now that it's not necessarily the season where you see a lot of machinery purchases specifically. And so that one in particular, we're really not going to know whether it's going to be down compared to last year until you get later in the year when they look at their cash flow, because the cash flow right now is quite uncertain with the input costs we're dealing with, and obviously we don't know what the prices are going to be this fall. They do look better, however, than they did just a few months ago. And so that we have to see how that shakes out to see what the cash flow ends up being. But obviously, with that index down, people are thinking that their cash flow is not going to be very good, and they're not going to have a lot of money to spend on machinery and buildings.
Yeah, that's the reason that we see these numbers. This month, we also repeated 2 questions about the Iraq conflict and its potential impact on farm finances in 2026. The results were very similar to what we saw in April. About 2/3 of producers said they expect their net farm income to decline in 2026 because of the conflict, which began in late February. Among respondents who planted corn in 2025, about half said they expect corn break-even prices to increase up to 6%. Another 17% expect one increase between 6 and 9%, while 30% expect break-even prices to rise by 10% or more. So, Michael, these results reinforce that farmers continue to see that Iraq conflict as a big pressure, especially for corn production, right?
Definitely the case. And one of the things I want to point out here on the net farm income question, that's both crop and livestock producers. I think the impact's going to be larger on the crop producers, and so that's important to point out that's both groups. And about a third of our survey typically is livestock producers. So kind of keep that in mind when you're looking at that result. The corn break evens continue to surprise me a little bit. They're all over the board. But some people probably bought their fertilizer ahead of the conflict and others did not. And so maybe that's explaining part of the variability there. But I'm kind of surprised that there's a fairly large number that expect break even to be over 10%. That would be a very large increase in break even, and certainly would all the recent price increases we've had recently would wipe those out if your break even increase that much. And so that's disconcerting to say the least. And it's important to point out that question, of course, only went to corn producers. It didn't go to anybody else. And so that I found that very interesting. I did some back of the envelope calculations about a month ago, looking at just the Purdue budget, and if you hadn't bought your nitrogen and you assume that the diesel prices are going to remain elevated for the next several months, it'd be about a 5% increase in break even. So it's not small. But 10%, that's rather alarming that there was 30% think it was going to increase 10%.
Yeah, and nitrogen especially sensitive
Oh,
because of
yes.
corn, they use a lot. And
Yes.
nitrogen was also the element that the spike was
Yes.
higher this time. Yeah,
Urea and anhydrous definitely spiked.
yeah.
Diesel even more. But
Mm-hmm.
diesel cost is small on a per acre basis compared to nitrogen.
Yeah, that's true. We also included some questions this month about farm labor. About 39% of respondents said that they hire no family members to work on their farm operations. Among those who hire labor, 25% said that they are having some difficulty hire this year, and 19% said it has been very difficult. We also asked farmers whether artificial intelligence tools could help improve their current labor and equipment situation. The results are quite interesting. 59% of respondents said AI tools would improve their situation, but 37% said they could help some, and 4% said they could help a lot. Michael, does this suggest that some producers may still a little cautious related to use the AI tools in their operations?
I think that's definitely the case, and when you talk about AI tools, I think there's a lot of farmers still trying to figure out how they're going to use them, and so this is a question that we want to ask. We want to ask periodically to see if that 4% increases. My guess is it will. That they'll start using these AI tools for more. And part of it might be a little confusing about the question. There is a lot of data-driven software in combines and planters, and so that has some artificial intelligence in it. And so maybe we need to think about the wording of the question a little bit. But I expect that 4% regardless, I think that 4% will increase over time.
Oh yeah, and if you ask this question 2 years ago
Yeah,
or
it
three,
wouldn't even be on the
zero
radar.
maybe
Yeah, it wouldn't be on the
exactly.
radar.
Yeah, is a very fast change. So let's turn to farmland values. The short-term farmland value expectation index increased from 121 in April to 130 in May. And the long-term index also moved at higher, rising from 155 in April to 160 in May. Michael, what do you think farmers are more, why do you think they are more optimistic around the farmland values compared with other index?
This is a bit of a head scratcher to me, and quite frankly, I was a little surprised that particularly the short-term land value increased as much as it did. When you ask them of the factors that are impacting land values in the area, by far and away the most important factor is alternative investments. Now that's a pretty broad term, but that tells me that there's probably still interest outside of agriculture in agriculture land. So when a land comes up for sale, it might be an institutional investor or local non-farmer that's interested in the land. But I think it's safe to say that there's still quite a bit of demand for energy projects and data processing centers. That's become news recently that there's going to be a lot more data processing centers, and a lot of times they like to locate in rural areas that have plenty of water.
Yeah, that's the reason that we see this
Yes.
difference. Yeah. And since July 2025, we have been asking producers whether they think the US is headed in the right direction or is in the wrong track. After averaging 71% during the last 6 months of 2025, the share of producers who said that US is headed in the right direction fell from 57% in April to 52% in May. That's the lowest percentage since we started asking this question last year in July 2025. Michael, what do you think is driving this decline in this sentiment around the direction of the country?
Well, if we go back to last year, as you indicated, the index averaged 71% the last 6 months of 25, and unfortunately, we didn't ask this question before July 2025. I wish we would have, in hindsight. But if you go back to the last 6 months of 2025, the index of future expectations was stronger, and so I definitely think this is tied to the index of future expectations. But I just like I'm a little surprised that the long-term land value index increased as much as it did. This is actually if you combine the long-term land index with this question, we've got a positive move in long-term land value index and a negative in terms of this question here. And so maybe that helps explain why the index of future expectations didn't do anything. Usually when you see a large increase in the index of future expectations, the long run policy environment is more positive. Obviously, it's not this time. And you see an increase in the long term land value index. This time it was mixed. And that's the only way I can interpret this is there's quite a bit of uncertainty there about what policies are going to be. And so people are feeling a little bit concerned about what the long run policy environment is going to be. But there's enough outside forces impacting land values that they're still optimistic about land values. And so, that's the only way I can explain this is if we've got some countervailing factors that are impacting the long term
I know,
outlook.
I know that's a tough question, but what could you expect in the next couple of months,
I
given
think
the current
I think
situation?
this I don't think this is going to improve. I think it's probably going to be relatively stable,
Mhm.
hovering around that 50%.
Mhm.
I don't necessarily expect it to continue to decline, but I can't see it increasing either. As long as we've got these high input costs, people are going to be very concerned,
Yeah.
both short term and long term, and the longer you stay in this conflict like this, the more concerned they're going to be that these input cost increases aren't short term, that they're moving into long term. And so one of the things I'm keeping my eye on that's very concerning is general inflation.
Yeah.
We talked about the fact that it was nitrogen and diesel that was increasing. Well, if you have a uptick in general inflation, that's going to impact a lot more inputs.
And you
Uh,
can see some impact in the next crop season,
yeah, it could,
2027.
and so
Yeah.
I think that could be part of the reason why they're not real as optimistic as they would be otherwise long term. Because you look at the price, like I said, earlier, prices actually look better. You look at the
Mm-hmm.
futures prices; they're actually quite a bit better than what they were a few months ago. But again, it's mixed signals. So you got some positives and you got some negatives, and quite frankly, it's a little surprising that the index is as strong as it is.
Yeah,
I think if we wouldn't have these positive crop prices, it'd probably be lower.
that's true. So, and those are the key takeaways from this month's survey. You can find the full Ag Economy Barometer report on our website, and we have included the link in the description below. Thanks for watching, and be sure to like, follow, and subscribe so you don't miss future updates and videos from the Purdue Center for Commercial Agriculture. We'll see you again next month.